Okay, everybody. Hi, good evening. I'm John Ozzie, Head of Training and Development at AudaCity Capital. I teach the fundamentals and technicals of FX trading, and I help people who want to excel in this industry. As you can see, this is my email. If you'd like to contact me regarding training, maybe a brief conversation, or if you're having any problems in the markets, that's my email address. People on the HTP or people on the fast track or on the mentoring program, you have my direct number and you know the rules, because at the end of the day, it's there for two reasons. One, to protect my privacy. And number two, you've paid a lot of money to be mentored by me and to be on the fast track or the hidden talents program. So if you paid for that and you got the support from me, it's not fair on you giving my number out for free as well. So with that said, the second point, some of you contact me on the AudaCity community app. That's another platform to contact me on as well. And on that platform, you can see I'm very active, and you just follow me with the green badge. I post a lot of updates, a lot of little short tips as well. So that's a good platform to communicate with me as well. Some of you are not on the Hidden Talents program. You're on the Fast Track program, where you're managing company funds independently. And that still gives you priority to access me and talk to me. So if you are on the Fast Track, just send me a private message. I can always verify if you're on the FTP program, and we can have a discussion. As of late, I've made an exception for people on the FTP program. Once you pass the 6-figure mark, you definitely have access to me, and you have a consultation with me. And we have a series of mentoring support sessions as well to help you get to the final step, just like Vladislav. And I have a gentleman called Victor who is on his way to going on to $500,000. So that's it. So going on to the second one. So this slide here, some of the slides have been used before, but the points I'll still re-emphasize. Like I said, this is just a summary of all the main points I've said on the webinar, and I've had on the webinar over the last 6 months, and they're still relevant as well. So these are the best currency pairs I've seen all the traders trade, and also in terms of all the reviews I've done on YouTube. So these are roughly a summary of all the trades taken. So bear that in mind. You know, they come in different forms. You got the 7 major world pairs. You got the dollar pairs. You got the euro pairs. You got the yen pairs. You got the pound pairs. You got the Aussie pairs, the Canadian pairs, the Swiss franc pairs, and the New Zealand dollar pairs. All these pairs are tradable. But some of these pairs are quoted the other way around, but some of them are repetitive pairs. The pairs that brought the most volatility in to date of the last 6 months are mainly the pound pairs, because the pound pairs have been very volatile. So there's been a lot of volatility in the pound pairs. So I will always pay special attention to the pound pairs. Some of the people in this webinar have hit their 10%, and I know who you are, so you know what I'm talking about. Another point we covered is what type of traders do we have on the market? We have trade scalpers, people who just come in and out of the market very quick, very fast. We have day traders who open and close trades on the same day. And we have swing traders who like to hold trades for a period of 1 to 4 days or even more. And we have position traders who hold trades for months, years, weeks, and just over a prolonged period of time. But unfortunately, on the Hidden Talents program, you don't have that flexibility of holding trades beyond the weekend unless you've got special permission, and that's at the discretion of the risk manager. There are 3 main market conditions that we've always spoken about, and these are the 3 main market conditions that are present in the market. On the Hidden Talents program, I've actually added some new content to it. So the new people that have joined the Hidden Talents program will get to see the benefit of the new subject areas I brought into play, like supply and demand and the Wyckoff theory. That's been very profitable for a lot of traders. Some people as well that have already done the Hidden Talents program, that's fine. They still have access to me, so they get the updates, because when you're on the Hidden Talents program or on the Fast Track program, you get all the updates. It's support for life. And just to distinguish between the Fast Track program and the Hidden Talents program, the Fast Track program is for people who just haven't got a track record and they want to fast track their journey on managing company funds. That's option number one. Option number two, people tend to come from the funded trader program where they're struggling. They've lost a bit of the capital. They've hit their drawdown and they need support. So the fast track is like a reset. So you have two options on the fast track. If you're on the Hidden Talents program or the FTP program and you hit your drawdown, what we've put in place is now you can join the fast track. That's option one, where you get half the funding and the account is reset back to zero, but now the risk parameters are half the size. So once you get 10% on 7,500, which is 750, then you move back to $15,000. And the advantage here is that if you maintain the rules and stick within the risk parameters, you are not going to pay the monthly fee of 117 or 115 euros a month or 99 Great British pounds. So that's the advantage there. So that's on that. So I will touch base on that later on. These are the four main candlestick patterns that I tend to trade, and most traders have been trading and they've been very profitable trading them. We have the engulfing bar and the pin, the morning star and evening star. I sum both of them up as the doji. On the right hand side, the morning star, evening star is my doji, and the engulfing bars are just a candle that overshadows another candle. And as we can see now, if you look at this candlestick pattern here, we got the resistance, then followed by price rejecting the resistance, and we have the engulfing bar on the second candle. So you have 1, 2, and you have the 3. So you put your stop loss in place and you target at least 2 to 1 or 3 to 1 of the previous level of support or previous demand level. So these are things that you can use to get in and out of the market consistently and profitably as well. In terms of the doji is used as a very good entry point and a very good exit point as well. I use the doji mainly to find optimum entry points at key levels of reversals or key levels of a continuing trend, because what the doji is just a balance of buyers and sellers. They're equal. So you have to understand your candlestick patterns. There's a free PDF on the internet. It's all over the internet and people know about it. It's called the Candlestick Bible. The Candlestick Bible is free. You can download it. It has all the resources in terms of candlesticks and the anatomy of the candlestick. I make that available anyway on the Hidden Talents program. It's a free resource and that will definitely help you understand candlestick patterns and build your price action strategies or your strategies whatsoever. Trading plan. I will come back in depth on the trading plan later on. But looking at the trading plan, you have to understand when do you get into your market. So if you ask yourself specific questions like, before you trade, identify the trend. What's the market direction? This is a key thing I tell all my mentees and I tell all the traders. There's always a possibility of you reducing your risk of losing money, and that is identify the market trend. When you identify the market trend, you know where price is going. There's no two ways about it. So once you identify the trend, you have to look at what pair are you going to be trading. Then you have to take a note of the fundamentals for the week. The fundamentals for a week, you can work that out from the FX calendar, or you can look at my FX book, or you can use the Forex diary, and there are a lot of good websites and apps out there that will help you find the fundamentals that are available for the week. Then we have what market condition are we in? Are we in a bullish market? If we're in a bullish market, is price at support? Yes, price is at support, then we buy a pair. If price is not at support, we don't, we wait. It's very simple. So just asking yourself very simple questions, you can avoid over trading or getting into a bad position. If price is consolidating, going sideways, we just wait for the breakout. We wait for price to break and close above the highest point or below the lowest point. The bearish market, is price at resistance? Yes or no? If price is at resistance, then we sell the market. If price isn't at resistance, we just wait. It's very simple. There's no two ways about it. So we take away the guesswork from trading by just following a systematic way. Now, looking at a basic structure now, this is a simple breakdown of getting into a candle entry. If we look at the resistance here of this chart, we can see a doji right here. And after the doji, we see the doji rejecting the resistance. I tell a lot of traders, understand what the market is doing, the wick. The wick shows you that buyers try to break the resistance, but at the end of the day, the sellers push them down. And here, this is why we have rejection. So very important, when you find a wick at key resistance area, you know the next candle is going to be bearish. So you wait for that confirmation candle, and this is it. And you enter the trade at the open of the new candle, which is entry here, and you keep your stop loss to the top. Get a nice little 2 to 1 and you get your exit. Very simple, set and forget. Some people like to use various time frames. I recommend time frames of 4-hour to daily, or even the 8-hour if you use TradingView Pro. That will help you find the optimum entry. And the 8-hour candle is very good because you cover all sections. You cover the Tokyo session, you cover the London session, and you cover the New York session. So you have best of both worlds, or 3 worlds. A simple breakdown, as you can see, again, looking at it from the support side of things, we can see the doji here, we can see the wick here, the pin bar. The wick has closed right above the support level, and that, as we can see from the left-hand side, we got a stable drop. From that drop now, we know price is likely to reverse because of the pin bar. The pin bar closed above the support, followed by the confirmation candle here. We could buy at the open of the third candle, which is here. And we probably just calculate the risk from top here to the bottom. So if top to bottom is for, say, 10 pips, we target 20 pips, which is 2 to 1. And 2 to 1 would give us a nice risk to reward ratio. If that's not possible, what we can do, we can look at the swing high of the previous candle and just target that and trail our stop loss. So there are various different ways to make money in the market, in and out. So these are just examples. Now we have reversals. This is known as a tweezer bottom. As you can see, when you see a tweezer bottom, it's a very simple setup because you're going to have a bearish candle followed by a bullish candle, then the engulfing candle. A tweezer bottom or tweezer top automatically follows with an engulfing candle. So that's a very good level to get into. And once that engulfing candle is formed, as you can see, confirmation, close, you target the previous high here, or you just target 2 to 1, which is the entry, stop loss multiplied by 2. We give you a potential take profit level. So I can actually annotate it here and just give a nice various illustration. So if this is your entry, your stop loss here, you got here, the stop here. So you could probably got in here early or get in here. So let's just take the long conservative way, top to bottom. Let's say this is what, 20 pips. Our target will be by 2, which will be 40 pips. So 40 pips can be somewhere about here, or we can just target the previous swing high here. So we get in here and we target this level here as a take profit because this has come all the way down, and we can target from this level here to hit the top here. And if you just draw that across, that gives us our take profit level. So that's another good way of looking at it. So 2 to 1 is a very simple way of getting into the market. And as you get more confident, then you can scale it up, going for a higher level, maybe 3 to 1, 4 to 1. But you have to understand, master 2 to 1 first. Then for all your potential losses, you only need 1 trade to make 2 times it back. So this is a very good way of making money and being consistent with your trading. Moving on to the next slide. It takes 6 months of consistency to put you five years ahead in life. Well, what I mean by that, because we're in June right now, we're going into July. So let's say you spend the next 6 months really studying hard, practicing on your mistakes. You can be 5 years ahead of your trading. So that is something very good you can put into practice, and that will bring discipline, consistency, and continuous results. So that's something to bear in mind. Confluence trading. What is confluence? Confluence is just basically giving yourself more reasons to validate a trade, to make sure that you're confident that, hey, this is how I'm breaking down the market. And based on my analysis, I'm 110% sure the risk to reward is in my favor and everything's lined up. I got a valid trade based on logic. We can use candlesticks to confirm our analysis. We can use indicators, or we can use chart patterns, or we can use a combination of all three. Everyone that knows how I trade, personally, I just go with candlestick patterns, chart patterns, and order blocks, which is a bit advanced, but there are no indicators in my trade with my trading. I just basically have to identify the buyers and sellers, who's in control of the market of that time frame, and what is the overall direction of the market. Trendline trading. We mentioned before about the market structure. What is the market structure now? How do we identify it? We know an uptrend, we have higher highs and higher lows. With a downtrend, we have lower highs and lower lows. This is a downtrend, as we can see. We can see price has rallied up to the resistance line. We got a wick showing the rejection. We have the lower low. Price rallied down, broke the previous lower low, formed another lower low, came back up and formed another lower high on that resistance line, the trend line. Price rejected it for a second time, came back down and formed another lower low. Price found the base again, another point, came back up to test the line, rejected it, and now price is going down again. But if we look at this, I'm going to annotate this. This actual candlestick patterns presented itself a few times this week on a few pairs. And I'm going to show you an example of how. Let me just annotate that. So, for example, so as I've said here, this is one pattern. Price has rallied up from here. So now price has rejected it, as I said. So based on this rejection, the candle closed. We can sell the market here, put the stop loss right on top of the wick here. This is our entry level, this candle here, and we can target the previous lower low as take profit 1. And at the same time as well, we can target 2 to 1 as well, which might definitely bring us just before the stop loss level or take us out just about, and that's fine. We can either enter in or out, but we gotta make sure at least we get 2 to 1 minimum or greater, but we definitely target the previous lower low. The previous lower low has formed a base now, as you can see, is a wick. So now this is support. Price now closed above that candle and opened up with another candle here. So on the basis of the rejection here, you can put your stop loss in place here and target another 2 to 1 or target the previous high. But obviously that will not be possible 9 out of 10 times because the market has dropped too tough. And this is where you probably have to put market structure into place and look at things like supply and demand, order blocks, and other sophisticated strategies to identify the potential reversal point of the market. But the simple way of looking at it is looking at the higher time frame and identifying where the market trend is going. So what I normally recommend to traders is just put a line chart in place. When you see the markets drop down, form the base, came back up again to hit the resistance line, just take it back down again. Because at the end of the day, you see the pattern. This is one leg up, that's 1 point. Down again, the impulsive move. Up again, that's the N. So this is forming the M pattern. And as you can see, price will always break this lower low because price is rejecting the lower high to come back and test the lower low. And doing that, we have the M pattern complete. This is where we are. So you have 1, 2, 3. We have the M. So we first trade the first impulsive move. That's fine, it's going up. And this is where the reversal is. And after reversal, we take the point down to hit the lower low. And after that, you get the lower high, then you target again to hit the lower low. The lower low is formed again, the M pattern is complete. Now the pattern starts again. come up to another lower high, complete one, we got a reversal. Price has done an impulsive move down again. So what do we wait for? We wait for price to form another lower low. After that lower low, that'll form the base. Then we're going to take it back up again, potentially to the entry, then down again. And this is how the pattern completes. MW. It's just a simple market structure. And I'll give an example in this PDF webinar. So multiple touches on a trend line helps a lot. So some people trade with this British pennant, bullish pennant, or the triangle. The triangle can be traded on the bullish side or on the bearish side. And that's just identifying the lower highs and the lower lows and joining an acute angle together and just take the breakout. And as you can see from the top side to the downside. Noisy traders get confused from all the information, the emotions, charts clogged up with indicators and other things, vice versa. So always try and ignore the noise. Always think less is more in terms of your trading, because the less on your chart, the more clarity you can see, and the more information you can process to make an informed decision. A false breakout. As you can see, prices hit the resistance line a few times, but as you can see, prices rallying back down. Now price has broken up, but based on this now, we expect price to go down, but price didn't. So no candle closes above the resistance line, very important. So we always want to have a candle close. This candle was the exception. The candle closed above the resistance line and came back down to test the line before rallying back up. So candle close is very important in any time frame or on any time frame you're trading. Always wait for the candle to close, and that confirms your entry on either way, the upside or to the downside. Basics of day trading. Like I said, to reset this webinar, like I said, I've taken the best bits of all the previous webinars and reinforcing on certain points, and also showing you what other traders have been using from these webinars to make money. Cut your losses short. Protect and preserve your capital, then grow it. For example, if you're up by 40 pips, there's nothing wrong in securing half of it, closing half your lot size, or moving your stop loss above your entry point or below your entry point to lock in profit, especially if you're having a deficit, you're in your drawdown. I've seen this a lot with traders. When you're down in the market, anything counts. So if you've got 20 pips, yes, I do recommend you trade with good risk to reward ratio. But if you see $20, $30, you've got a big deficit, just close it. I know it's painful. It's a lot of hard work, but keep on taking 20 pips. Just close it and wait for another opportunity. If you keep on taking small, consistent pips over time, those 20 pips times 5 will give you 100. Do that again, that comes 200. Then you're going to build up your deficit and reset the balance again. So it's always important to take money off the table when you're facing a substantial drawdown. Always journal your trades, because mentally parking your problems before settling down to trade will help you. You know your mistakes, you know what you've done wrong, and at the end of the day, that will help you to, stay balanced and have that mindset focused and give you that psychological advantage. Building a watch list. Know what pairs work for you the best. I always say this on my reviews as well. And always pick out the best pairs traders use to make money. So know your best pairs and focus on them. I recommend about 4 minimum. Chances are you're not going to lose the big opportunities. You're always going to find the right setup, and that will help you get to your 10%. Control your emotions at all times, because greed is the biggest substitute for failure, because when you're greedy, you don't see clarity and you're always going to be chasing the market. It becomes a stressful situation to be in. We all make these mistakes. Just for 20 pips, we're over leveraging. Sometimes it will work and sometimes it will not work. So always bear that in mind. Over leveraging is not the way forward. Pull back on a trend. As we know of the market never moves in a straight line. The market will always pull back at least 50% or 61.8% of the time based on the Fibonacci principle to test the previous high or previous low or previous resistance or swing high or swing low level. So just understand how to identify these things. There are YouTube videos, there are even notes on the AudaCity community app where I point out on how to get into the markets on pullbacks and find precise entry points. So this is something you focus on, your entry. Once you get your entry right, your stop loss, you know how much you're willing to risk, and what is your exit. Just take at least 2-to-1 minimum and you're good to go. Some traders tell me, oh, I get in, I don't know when to get out. I get in, I'm in profit only for the trade to reverse around me. And the reason why the trade reversed around you, initially you're in profit, and that pair probably hit a resistance level and decided to reverse against you. So maybe your stop take profit was too close or too high or just extremely too low. But if you follow the 2-to-1 principle, you're always going to have consistent results and obviously show up every time with money in the bank. Resistance, like I said, when you see a wick at key reversal point at resistance level, just know the price will drop substantially lower. And the candle close, you got a wick here, that's fine. Then you got another wick, 2 touches. So you know the third candle here, sell at the open, you definitely be able to touch this previous low here. And probably if you use a Fibonacci projection from this swing low here to the high, you can target the 161.8. So there are various ways to get in and get out of the market, but I always say, just to keep it very basic and simple, the 2-to-1 principle works all the time. Nothing's 100%, but you'll be very successful just trading minimum 2-to-1. And as you get more consistent, you can build up your confidence. Candlestick patterns. We have to understand there's so many candlestick patterns out there, but pick 2 or 3 or 4 candlestick patterns that work for you. What candlestick patterns give you the best profit? What candlestick patterns give you consistency? Is it the Marubozus? Is it the hammer? Is it the spinning top? Or is it an inverted hammer? Is it the tweezer bottoms? Is it the engulfing bar? You choose what works for you. Like the hanging man, as you see, we got 3 consecutive bullish candles followed by a bearish candle. So based on this middle candle here, I just need the candle to close, to confirm and close, and that candle's closed here. The second one's confirmed and closed. So I will take my short at the break of the low of this hanging man candle, or at the open of the new candle, which is here, and target 2-to-1, or I can target anything greater. And I can show you a quick example here. So if I put my resistance line just above here, this is my confirmation candle. So as soon as the market opened here, I can take my short. I will target my 2-to-1. So if this is 50 pips, I can initially target the previous low here. And maybe my 50 pips can take me beyond here. So either way, I can have 2 positions. I can take my 2-to-1, which is here, and I can take my swing low touch out of that. So this is how you can trade. And you can be very profitable because you've identified the key level. You're selling from the top, and you can buy from the bottom. So remember, when you're selling from resistance, it's like a falling stone. The impact is twice as hard compared to a bullish market. So this is another way of making consistent pips, by trading from a resistance level or buying from a support level. Let's see if I've got a few questions coming in. Just hold on a second. Let me just make a note of them. Yep, we have more people coming in. So yep. So sorry guys for the people who missed this. I'll just have to carry on. So trading plans. So now, I said smart traders have a trading plan. I always tell traders, trading should be fun. Have a trading plan. Trade with friends. Consistently always seek knowledge for growth. Spend more time studying than trading. Backtest your trading strategies on TradingView, or there's another platform called Forex, and always journal all your trades. When I mean spend more time studying than trading, I have a principle. When I'm not trading the markets, I'm studying new strategies, or I'm reading books on various books on trading and psychology, as I said in the previous webinar. And when I'm trading, I'm trading. So either way, I'm developing. So when I'm trading, I'm making money. When I'm not trading, I'm studying, which will give me knowledge to make informed decisions to carry on making more money and preserve my losses. So it's a win-win situation. So that's what I mean by studying, more time studying and trading. What is a trading plan? It's an action, it's a goal, it's a roadmap for you, how you're going to trade. And no trade should be taken without a well-researched plan. So if you want to make maybe $10,000 a month, in my books, if you can make $10,000 a month consistently, you master the art of trading. But in order to get to a level of 10,000 US dollars a month, you need to be able to make at least 100 pips consistently. So what's the strategy? What's the trading plan to help you get 100 pips, talk less of 10%, which is equivalent to 300 pips at the maximum lot size level. So if you're on the Hidden Talents program or the FTP program and your balance is 15,000 US dollars, in order to make your 10%, you need to get 300 pips. So that's 0.5 times 300, which gives you 1,500, which is your 10%. So how do you go for that 10%? Do you go all in with 0.5 lots, or do you take it 0.05 lots and break it up in order to achieve your goal? But remember, as a trader as well, you have to factor in your losses. So factoring in your losses will also help you keep a straight head as well and keep you emotionally stable. So second part of the trading plan, a plan written down and followed and not altered is a solid plan to make it work. Not, oh, this is my trading plan. Oh, let me change this, let me change that. When you keep on interchanging your plan, it brings confusion, it brings inconsistency, and at the end of the day, it's not a plan, because a plan is a set rule, a set criteria, and a set of instructions to follow down to the T to help you get that result. And if you're not following a plan or following instructions to help you get that result, anything you get is chaos, uncertainty, and potentially you blow your account. The third part, the basic trading plan, includes what I've mentioned before: entry points and exit points, as well as risk management and position sizing. So you need to know your entry, you need to know your exit, and in terms of your risk management, you need to know how many pips am I risking, and what's my lot size, what volume am I trading at. So this is something important you have to understand and something you have to put in mind when you're trading the market. Breaking down timeframes, another point I pulled out from the webinars and something I talk about to traders consistently. You have the weekly time frame, you have the daily time frame, you have the 4-hour time frame, and you have the 1-hour time frame, and you have the 15-minute time frame. All these 5 time frames are relevant. Depending on where you get into the market, some time frames you're going to find opportunities, and some time frames you're going to find a few opportunities. Like the 15-minute time frame, you're just looking for a break and retest of structure. On the 1-hour time frame, you're looking for rejections and signs of failure. On the 4-hour time frame, you're looking for best market structure and identifying a potential trade setup. On the daily, we'll find direction, support and resistance, and liquidity areas. On the weekly, we'll find a major trend and support and supply and demand areas. Take note of the weekly high and the weekly low. So all 5 of these timeframes help us decide when to get in the market, when to get out of the market, and at the same time, when to get the optimum level to take a specific pair to make profit. So it's always important to understand what sort of trader you are and pick the relevant time frame to complement your personality. Typical trading week. As we know, the market opens from Sunday night at 10 p.m. GMT British Standard Time to Friday 2100 hours British Standard Time, which is 5 o'clock in the US, depending on what time zone you're on. Sunday, what I normally like to do, but I like to do this on Friday because a lot of things can happen on the weekend and you can get distracted. So on Sunday night, I like to review my trading journal for the week, set my goals. Okay, I want to trade X amount of pairs. I'm targeting X amount of pips. These are my opportunities, maybe a break and close, maybe prices at a key level or whatsoever. I put myself in a situation to make the money. So that's my preparation. And preparation is key. When you prepare, you're prepared for success. But when you just go trade on the live market, there's a lot of uncertainty and you're not really going to get the best move possible. So always look at what you're trading in terms of preparation. Preparation is key. It's discipline, it brings consistency, and ultimately will bring the right results. So you wait for the market to develop on Monday if you can't find an opportunity on a Sunday, and you wait for price to do its thing. Maybe it manipulates itself, or maybe it's consolidating. On Tuesday, you can potentially look for setups using the high or low of the week. High probability when the low of the previous week is broken, you know the market's going to rally downwards for a few hundred pips. And likewise, when the market breaks up to the upside for the previous high of the week, the market's going to continue that trend. So this is what the market can do. Then you can look at a continuation, or you can see a pullback, or you can see more higher, lower highs and higher lows of the day. And Friday, I always say I don't like to hold positions on Fridays for various reasons. So once I'm in profit by midday on Friday, I don't need the stress of the extra few hours. So I just close my trade and just call it a day. So that's just my way of trading Monday to Sunday to Friday. Everybody's different, but the whole point of this little template is to give you an idea, to help you become accustomed to a habit, a way of life of trading the financial markets Sunday to Friday. Top-down analysis, as I mentioned before, top-down analysis can complement what I've mentioned before. So we have the 5 timeframes: the weekly, the daily, the 4-hour, the 1 hour, and the 15 minutes. So looking at these 5 timeframes, we have the weekly, which has the major trend and key levels for the week. Then we have the daily, which has the areas of supply and demand. And on the 4-hour chart, we have identification of structure and momentum. So when I'm talking about structure, I'm talking about the resistance level. Is a market bullish, or the bearish levels is a market support level and bearish. Then on the 1-hour chart, we're looking at intraday support and resistance levels. So what's the resistance for the day and what's the support for the day? Looking for a break for the upside or to the downside. And ultimately putting 1, 2, 3, 4, 4 together, that's the weekly, daily, 4-hour, and 1 hour. We find an optimum entry on the 15-minute chart, and this is what I call a sniper entry. What are the steps to professional traders development? 3 steps is 1, education, 2, application, and the 3rd and most important, this is how we traders make money: investing and compounding. Education, learn all the basics of FX and study an advanced, proven strategy from a profitable trader. Maybe you've got a mentor, maybe you're part of a community. Get your education from someone who's consistent and proven in this market, and build a relationship. And from building that relationship, you will improve a lot and save a lot of money compared to trying to do it by yourself. It's not like you can't be successful doing it by yourself. What you're leveraging with a mentor or someone successful is experience. Experience is something you can't pay for. Experience is something that you learn. You earn experience. You work for experience. So this is why mentorship can be very important and very costly, because the person who's mentoring you has his time too to make money, and time is valuable. So as we have to understand, time is exchanged for value, vice versa. So application, once you've learned your strategy, apply it until you see consistency. Consistency can sometimes take 3 to 6 months by yourself. But with a mentor, you can fast track that into weeks, because you have someone holding you accountable for your actions, and you're seeing the works of your success by putting in that hard work. Investing and compounding, that's another great way, because every time you invest into the market, your account is compounding based on the risk to reward ratio you're taking: 2 to 1, 3 to 1, reinvesting a percentage of your account. So compounding and the exponential effect, your account will grow. And this is how you get your 10%. By reinvesting your profit, taking another position and another position, although you lose a few, your account is still growing. And the whole point of the Hidden Talents program and the FTP program is to leverage capital, have it grow exponentially build your confidence, become an independent trader, and more importantly, earn a passive income from trading. Because normally traders have two situations. They don't have capital or they don't have knowledge. AudaCity Capital is asking, okay, bring a bit of capital to show your commitment, get the training, manage our capital, come consistent, and we reward you very handsomely and very fairly as well. You get paid on the same day and your account is doubled on the same day. Unlike some of the other firms out there where you have to wait 4 weeks, 5 weeks, and going through a verification process of getting your money. And as a trader, I'm a trader myself. I've traded for over 20 years. And I know it's very frustrating putting in that hard work and you have to wait 4 weeks to get your money. Well, AudaCity Capital, you get your money straight away. The only exception to that as of recently, and everyone knows, it's not like it still takes a whole 4 weeks. If anything, you get it before end of the close of the working week. And the only reason why it's come a bit challenging was, one, we were facing a lockdown. Some of us were working remotely from home. As you know, London, we're on a lockdown. We've only just come back into the offices as of June. So a lot of the support was out of hours. And the team has done a very lot of hard work been put into place to make sure the system runs efficiently and everybody's rewarded accordingly. So there's a lot of effort on the back end of things. So when you send a message on the app and you don't get an instant response over the last few months, you have to factor in the lockdown period as well. So everybody was in a different time zone and a lot of people have been hitting 10%, as you can see from my reviews. So that tells you that clearly, if it's the webinars, the education, the HTP and the support, or the traders actually just being very good, it's a win-win. The company is making money, the traders are making money, the traders are happy and confident. And look at the app, we have over 3,000 to 5,000 followers now on the app and still growing. So this is based on the hard work and the back-end support. So just something to think about. And if you're not part of the app, join the app. You meet like-minded traders and bounce ideas and help yourself grow. Another thing in trading, there are certain things you have to master as well to become consistent. Analyzing the market. Learn how to analyze the market, knowing when to buy and when to sell according to your system. Entries. Always develop rules and a strategy to follow every time your analysis plays out as explained and as planned. Risk management. If you cannot manage risk, you will not survive in this business, because at the end of the day, it's not just about the strategy. Risk management keeps you at bay. Risk management keeps you in the market, because if you don't know risk management, you're going to hit your drawdown and you're not going to have money to trade anymore. So risk is important. If you can't manage risk, you cannot make money. It's that simple. So manage risk first and the money will flow exponentially. Correlations. This is a little bonus I thought I'll share. There's some pairs that we trade, they go like for like, and they do tend to stay the same way. Positive correlations. When the Australian dollar, US dollar is in a bullish mode or up, chances are you see the Euro US dollar too will be going the same direction. When the US dollar Swiss franc is up, the Euro Swiss franc will be up too. When the pound US dollar is up, the pound yen will be up as well. But on the negative side, when the pound yen is up, Euro pound is down. When the US dollar Swiss franc is up, the Euro US dollar is down. And when the US dollar Swiss franc is up, the Australian dollar US dollar is down. So this is a nice little correlation, a 6-point template to use. So if you see one pair's in a certain direction, you know you can look at another pair to find the opportunity to trade the market. So if you just follow this template, you can find 5 to 6 or 4 opportunities and just put your risk to reward parameters in place, follow your strategy and trading plan, and you're good to go. Risk management guidelines. You can risk 1 to 2% per trade. Introduce a break-even rule to your plan. Always take partial profits away from your account. Determine your daily and weekly risk rate. So determine how much you can afford to lose at any given week. When you put that into play, it will help you. It will keep you in control and you won't be over trading. Don't be greedy. Being greedy will lead you to uncertainty, double exposure, and risk. Do not enter a trade without stop loss. because trading without stop loss is just asking for trouble, and it's exposing yourself to a lot of uncertainty. Forex trading secrets, things to do. What can you do to be consistent? Always trade with the trend. I recommend that a lot. Always use a stop loss in place. Never quit, and learn from your mistakes, and always continually look to improve. Why do people fail at trading? 1, lack of knowledge, lack of money, no trading plan, no patience, no discipline, and overall risking too much. When people risk too much money, they leave themselves to uncertainty and they blow the account. There's no two ways about it. You will not be a successful trader if you do not manage your funds appropriately or consistently. So, as I always say, discipline and consistency is key. Learn how to be disciplined with your funds and you will make the money. If you're not disciplined, you're not going to make the money. It's just as simple as that. There's no two ways about it. So just always bear that in mind. How can you be a consistent trader? This is a very interesting subject. I've had this discussion a few times with a few traders. Oh, I've done this, I've done that. Oh, I got an algorithm. It's not about an algorithm. It's not about this indicator. Always start with small. Less is more. Make a schedule of how you trade, when you trade. Understand the pairs that you're going to be trading. Then make a set of rules. If you follow these 4 tips, you would definitely see a big improvement on your trading. There's no two ways about it. I enforce it myself. People who work with me on the Hidden Talents program or on the Fast Track, this is what we do. And I will not mention names. A few people are on this webinar. They worked with me. They had significant drawdowns, and there's been a big difference over the last 3-4 weeks. If you look at my last 2 video reviews, there are 2 or 3 people who hit 14%, 15% drawdown, and they came back with hard work and hit 10%. So in this business, you can be right or wrong and still make money. Even one of our best traders, he's 50% right, 50% wrong, and still made profit and still manages the maximum level of 500,000 US dollars. So always remember, you have to have that self-belief, discipline, and consistency, and the profits will come to you. Do not chase the market by any means. What do you need to do? Always trade with the trend, as I said before. Always use a stop loss. Some traders trade without stop loss. Oh, I'm just scalping. What if, I don't know, Christina Lagarde decides to make a key announcement, or Draghi makes an announcement? The market can just go tanking in the other direction. And without stop loss, you're losing excessive pips. Then when you get closed now, you close that position, you got the hard work now to rebuild yourself mentally, emotionally, and again, over-analyzing, it brings uncertainty. So always think about less is more. Use a stop loss to protect yourself, learn from your mistakes, and there's always going to be another day trade in the financial markets. 6 ways to improve your trading. 1, read the news. Check worldwide events that affect currency prices. We've said it before, create a trading plan, a strategy that has the right edge, and we help you get the edge in the market. Patience, focus on the big picture. Don't focus on short-term gains. Focus on the bigger picture, and you're going to make money consistently. Trading and discipline, follow your trading plan with discipline, and you get consistency. Dress up every morning, even if you're trading from home. Have that mental block, and you'll be fine. Keep up to date with your technology. Have the internet connection, have the iPad, have the phone, have whatever you need to help you get to that level. Trading checklist. I made this little template of A to D. First, identify your currency pair, your time frame, and what direction, what's the market structure, any major news releases available, tick your boxes. You have chart patterns, price rejection, correlations, volume price analysis, and you have sentimental analysis, which is fundamentals and technicals. Make your notes, make your observations. What's your equity exposure? What's your entry point? What's your stop loss target? What's your take profit target? And what's your risk to reward ratio? How do you feel in terms of your psychology? I feel good, I'm indifferent, I'm in doubt, I feel bad. How do you feel? Make a note of that. The trade result. you hit your stop loss too early, premature stop loss, or you hit take profit. What happened? Just make a note of these key observations and you'll be good to go. Price action tools. So I'm going to take a little 2-minute break and just have a look at these questions and keep the questions going forward, and I'll make a note so I'll be able to answer the questions shortly after. Okay, now I'm back. So yeah, since you have, is there something like we haven't come their trading styles? Someone said, since I have access to all the traders, there's something common that all the traders have with their trading styles systematically. I'll say yes or no, yes and no. Some traders trade 2 pairs consistently, and some traders trade once a week with a certain lot size as well. So every trader is different. But at the end of the day, the only common thing I'll say with all these traders, every trader, is the goal is to make money consistently and preserve the drawdown. So that's the only thing I can say on that. But people who work with me, it's one of those things I tell them and I show real life examples. So that's something that I can show on the back end. But I do intend to compensate the webinars with something different, because on the YouTube page, there'll be a total different change than the format of videos coming out. I'll be sharing little short video clips on, hey, this is how I'm trading this pair, this is the result, this what went wrong. So I'll be putting my top trade every month and recording it and posting it on YouTube, and you can learn from that as well. So there's a lot of exciting things that'll be coming up on the next few weeks. So price action tools. These are the 4 ways I like to trade the market. 1, price action. 2, using Fibonacci extensions and retracements to get in and out of the market, and also to determine my exit levels or my entry levels. Support and resistance, same thing, we're determining where to buy and where to sell. And chart patterns, that's another thing I use as well. So these are all tools I use to make money in the market. So also, when I look at a chart, I ask myself 4 questions. Where has price been before? Where's price likely to go? What's the risk if I'm wrong? And what's the reward if I'm right? I look to the left to plan right. This is an example. We got an engulfing bar here, right? So if I go back, where has price been before? Price has been up to here previously. So let me just annotate that. So price has been here previously. So let me just use this as an example. So let's get that here. Price has been up here previously. So this is my previous swing high. So this is my entry. So based on that, so this is number 2. So let's just say this is chart 1, this is chart 2. So based on that, I'll be targeting, I expect my price to come up to this level here. This would be my target level. So based on that, I'll be targeting here, and I keep my stop loss here 2 to 1. And chances are I can get 3 or 4 or 5 to 1 based on this principle. Look at this pattern here. I have what? A tweezer bottom as well. I mean, bullish tweezer top. I can sell at a close here, keep my stop loss from here to here, and I can target the previous low here. This will be my take profit level. Just very simple, easy strategies that will help you get into the market and get out consistently without losing money. And if we go back to the previous example here, where has price been before? Where is it likely to go? What's the risk if I'm wrong? And what's the reward if I'm right? So this is my risk, as I said. Price has been here previously. If I'm right, I have a low risk, high reward. And I've looked to the left and I execute from the right. It's that simple. Look at this now, good example. You can see from here, this is a resistance. Price has rallied down. You got the tweezers at the bottom, bearish, bullish. I bought the market here. I targeted at the previous high here, and this is exit in profit. Simple. How do you find key levels in the market? Just use a line chart. You can see the trolls here, the reversal points, where you find out the resistance points. That's it. It's just simple. Just use a line chart, and that'll help you find key levels. The M&W pattern, as I said before, when you use the line chart, you look at price action, two higher highs. When you see price come back to test the other higher high, you know price is going to drop back and test the support, the medium neckline, and probably test the lower low. And you have the M. This is from the bearish side. On the double bottom bullish side, this is where we're looking to go long and buy. And this is basically supply and demand. So this is the rally. This is the retracement that formed the base. Rally down, base, rally, rally, base, rally, and you see the top. Then you see rally, base, drop. Rally, base, drop. That's it. Rally, base, drop, drop, base, rally. Simple. And as you can see, in terms of candlesticks at the bottom, you got the peak, fell down. Price came back to test as high 1, 2, and another drop. Look at the bottom. Price came down from the support level. Tested line here, came down, support again. 1, 2. Price has done that as well. So as you can see, price is doing what it's doing. M and W is simple. You can make money with this pattern all day, every day. Risk to reward ratio, as I said before, look at these 3 scenarios. I know a lot of traders that trade 1-to-1. That's good for you if you make it work. But I don't recommend 1-to-1 for various reasons, because you're overusing the leverage, and you can have a better position and you won't have enough money or capital to trade. So I won't recommend that. So I'll just let that be, to be honest. It's not really worth it, to be honest. But at the end of the day, you know, it is what it is. So you just have to remember, just do this the simple way. 2-to-1, that will always give you profit, as you can see here. Risking 1, getting 2 times the reward. Risking 1 here, giving 3 times the reward. Now see what's happened here. The low base, look to the left, you see the highest point price reach was here previously. You're risking the bottom here, so you're targeting the previous high. Same thing here, low risk, previous high. Low risk, previous high. But look at the risk reward, 1-to-1, it's not really worth it. So this is always something I recommend you put into your trading, 2-to-1. I spoke about wicks before. Why are wicks important? The wick tells you who's in control of the market, the buyers or the sellers. And as you can see, a small body with a low wick tells you neither buyers or sellers are in control. A body with a little wick, and a whole body shows you that the buyers are in control. So wicks are very important in helping you find turning points and potential profit in the market. So always pay attention to wicks. How do you find supply and demand? How do you find the base? It's simple. Look at it, the big impulsive move. See these 2 candles here. This is the big move, and that's the impulsive move. So when the market is consolidating, you can see it forms a base. And where's the base? See, this is the big move. The base is the build-up, the support, as you can see. Now you got on the resistance level, price is consolidating before the big drop. The base is always on the top side before the big drop. And it's on the bottom side before the big rise. And as you can see, the base from the bottom will now join them together. It will form a demand zone where price will go and test the previous high, which is the supply zone. And when price comes into that, it drops. Supply and demand zones, as you can see, it's a subject on its own, but to summarize it, anytime price comes to touch a supply level, you expect a big drop. And when price comes to test the demand level, you expect a big rise. And that's all we can see from here. Supply level came all the way down, dropped, another supply level formed, demand came up, back down to test the level, up again, came back to closing and test it again, and you see the big impulsive move up, the gap up, down, and you can see after multiple touches, it comes invalidated, then it forms a new supply level and a new demand level. So it's a very simple concept, and you can use Wyckoff theory as well to understand the market structure of this. Support versus demand. Support is the lowest point price reach where price bounce off. Demand is the order block where there was an accumulation of activity where a lot of people were buying into the market. So that's the main difference. Demand is where the big move comes after the support is broken. That's just it. Basics of indicators. We have MACD, RSI, Bollinger Bands, 9 EMA, 21 EMA, 50 EMA, 200 EMA, VWAP, and ADX. All these indicators work, but remember they lag. They mathematically lag. So you can use them for confluence, but I don't like to use them. I like confirmation, and confirmation is what gives us the results. These are some examples I'm going to use now in terms of trading. Applying supply and demand on the lower time frame. We've got the US dollar CAD here. As you see how I've annotated it, we got a supply zone. I kept my stop loss just above the zone here. As you can see, this candle here. You can see my pin bar here. And I want to sell at that level here. And as I did, I sold it here. My target is the previous low here. And as you can see, price broke beneath that low and I got my take profit. So what I'll wait for price to form a base down here as it's done a bullish candle. I'll wait for a confirmation and I'm going to take a long trade, keep my stop loss at the bottom. And when I keep my stop loss at the bottom here, I am going to target the previous high right up here. And that's it. So this is how you can multiple swing trade the market. Another example, the Euro US dollar. This is a very easy pair to trade when you see multiple rejections like this. Anytime price comes to this level, you can see price will drop down, hit the demand zone, come back up and drop again, multiple entries. So that's a good trade there. Now we have the Euro Swiss franc, the 4-hour chart. You can see a very strong demand zone here at the bottom. And you see pin bar 1, indecision, wick rejection. So anywhere along these lines would have been good to buy. We'll target the previous high, which is up here. And as you can see it, we got the entry here targeting that previous high. And now you see the market broke out further, but we still made money here. So this is another key example of how you can make money trading the market successfully. So let's use this little annotation. So let's say we're going from here. This is a target here. Price broke above, that's fine. And as you see, as price broke above here, this was a high before price came down. I always like to buy in the retest. Once the market comes back to the previous close, that's where I like to get in. That's the open of a new candle. And I'll keep my stop loss at the bottom and just target 2 times the length. That's another way to look at it. So the market can be traded various ways. So just another example. We look at another example as well. Let's see what we can do if we get another example. Look at the Australian dollar Swiss franc. Same situation. We have a strong pin bar here. As you can see, a demand zone. The demand zone is always at the low of the wick. Keep the stop loss there, the wick, and just draw a line. As you can see, the best way to look at a demand zone is find a wick and look to your left and find where the lowest price level is beneath that wick, and just draw a horizontal line 1 and then another horizontal line at the low of the wick, and you have your demand zone. Then just target the previous high. Very simple. Trading is a business. Accept your losses as a business. Develop a sustainable strategy with a long-term view. Invest regularly into your learning resources because you're always going to be successful if you invest in your business. Document all your profits. Think of them as pips as in terms of expenses and profit. Reinvest all your profits and salary into your business. Develop a plan and follow your strategy consistently, and you'll always be successful no matter what. 4 signs you're trading wrongly. You're staring at the charts all day. I see this all day, every day, especially on the trading floor. You're ignoring your trading plan. You're experiencing fear and greed. You're risking too much money. Why are people failing at trading? Like I said, no knowledge, not enough money, no trading plan, no patience, no discipline, and too much risk. The best pairs to trade in the market, like I said, of the last few months, I gave you a table initially, but from what I've seen in terms of reviewing the accounts, the euro yen, pound yen, and euro US dollar have been very consistent in terms of bringing in pips and spreads, hitting 10%. So low volatility, low spreads, high volatility, least manipulation, and a lot of money in there. We mentioned this before, and this is just reiterating the point in terms of looking at the correlations. How can you be consistent? Small, consistent gains, make a schedule, know your pairs, and make rules. You cannot finish a trading education and become a pro. It's a continuous process. I've had people finish the HTP. Oh yeah, I'm ready to make money. It's still a development. You still have to learn. Even me, myself, I'm still developing and coming better. So there's always room for learning, and trading is always a continuous journey of learning. Things that we mentioned before, I've mentioned some points over again, just to reiterate the point. Always trade with the trend. Use a stop loss. Never quit, and learn from your mistakes as you continually look to improve. Risk management, risk 1 to 2%. Introduce a break-even rule to your trading plan. Take partial profits along the way. Determine your daily and weekly risk exposure. Don't be greedy. Don't ask the market for more. Don't enter a trade via stop loss. Fear is the hardest barrier to break in trading. Once you emerge above fear, everything is possible. Master your fears. As technical traders, our edge comes from reading price action. If we get stopped out, it means we read the market wrong. Accept it and move on. If you have a fear of missing moves, then you don't know what your setup is. It's as simple as that. There is no FOMO if you know what you're looking for. Define your setup and stick to it. 2 essential skills to master in trading: knowing when to pull the trigger, knowing when to step aside and approach conservatively. Find the balance between aggression and conservativeness. And that way you definitely have a key level and a key point in terms of managing your trades. When taking a loss, the first instinct is, hey, I want to make my money back. Take a breather. This makes the situation work. Detach yourself from this mindset. Replace money with the process. Think of the process of making money and you'll be more consistent. Competent trading process combined with experience. Experience, patience, and discipline is what makes you stand out. That is the winning formula. It's as simple as that, no questions asked. You won't always be motivated. Growth comes from outside of your comfort zone. That is where dedication and discipline kick in. Persist until you succeed. If you have a fear of missing moves, then you don't know what your setup is. There is no FOMO if you know what you're looking for. Define your setup and stick to it. So when you know what you're looking for in the market, there's no FOMO. You're not scared, oh, I missed out on a big move, or this or that. There's no FOMO. What is yours is yours. You'll come back and make your money. So just stick to your plan and you'll come back and make it. Having an exit strategy is more important than an entry. If you don't know how to secure the bag, secure your profit, you'll always end up giving profit back to the market. So always know when to exit the market. Very important. So this brings us to the end of the webinar. Thank you very much for your time. And like I said, anyone that's not a member of the AudaCity community app, feel free to join. You meet myself and my other colleagues. As you know, I'm on there as a moderator. I got the green star. So follow me. I answer messages on the DM. You can private message me, or you can post a comment or like while I post, and I can connect with you and help you any way I can. people on the HTP, FTP, and on the mentoring program, they know how to access me as well. I hope tonight's been a night where you've had value and, you know, you've got something from this. So this is just a summary of the main points I've covered over the last 6 months. So has anyone got any questions they'd like to ask me or anything here? Let me see. So if what I can do, that I'm going to let 5 people, I think I still got time. Yes, I still have time. So what I'm going to do, I'm going to do something a bit unique here. I'm going to allow some people to ask me questions, and yeah. So if you want to ask me a question, just type in the chat box and I'll put you out there and I'll answer your question. So we can take some questions for 5-10 minutes. Let's see how it's there. So, okay, any questions so far? Let's go. Okay, we haven't got nothing in the chat box. So yeah, so I'm still here. And everybody that was on the webinar initially that sent the email, I do have your names and I've got all the emails in front of me right now. So I will send the people who initially joined the webinar waiting the free gift as I promised. For everyone else who joined the webinar late, I wasn't going to share this, but what I'll do, I will post this webinar on YouTube. But the special gift are for the first few people that joined that sent that email. So, and that's gone through. So I've already got a list of the names of those people that joined. So I will contact you at some point today and later on. And yes, I will get that free content to you as promised. And on top of that, the bonus content, which is the webinar itself. Once the link goes on YouTube, I'll share that with you as well, or I'll just share the link on the AudaCity community app and you can have access to that as well. How long does it cost? John Matthias just asked, how long does it cost to join the program? The Hidden Talents program is £3,000 and you can contact one of the acquisition team members on the AudaCity app with a green badge and just make your interest known. Or if you just send me a message on the back end of the app, just send me a message you're interested in joining one of the programs and I'll make sure I get someone to contact you sometime tomorrow. The program is 4 weeks on the Hidden Talents program. That can be done in the office or that can be done remotely. I did my interview last week. I haven't got any feedback from you guys then. This is from an anonymous attendee. Well, if you've done your interview, if you were successful, you have got a contract and confirmation within the same before end of close of business day. So if nobody's got back to you, then unfortunately you were not successful with the interview. So you probably have to apply again. And for whatever reason, I don't know why you are not successful, but if I know for a fact, if you were successful, you have gotten a contract to sign and been accepted onto the program. So if for some odd reason you didn't get that, clearly you're not successful. So if you want to talk more about it, you can send me your details privately and I can have a discussion with you and tell you in depth why you were not successful and tell you what you need to do to be successful to come onto that program. Okay, that's fine. What else? We got 3 more questions. So we've done all those questions. So any more questions? We got that. No more questions. Anything else? We've answered 4 questions. Anything else, guys? Okay, we'll just wait 2 more. Please put in your YouTube channel. I would like to follow. Yep. That'll be on Francis. That'll be on the YouTube channel in the before end of the week, by Friday or Monday. Yep. What else? We have Fahim. I've answered your questions. Yep. I'm not too interested in Wyckoff schematics, but I'd like to see price taken out of liquidity, break the level and get a retest. Yep. Supply and demand, all these things we do teach on the Hidden Talents program if that's what you want to come on to. But if you don't want to come on to the Hidden Talents program, you want to fast track it, get half the funding, then you're going to go on the fast track program. The name of the YouTube channel is AudaCity Capital. So you just go on AudaCity Capital on YouTube, you see the YouTube page there, AudaCity Capital. That's the name of the YouTube channel. And it's there, all the videos are there, all previous webinars, you can find them on AudaCity Capital. So I'll take a few more questions. Any more questions? Okay. Any more questions? I see anything I can help with. Let's just wait. Javier, okay. Okay, guys, I've got 2 more questions here. Let's just see here. See what questions we got to answer. What kind, okay, or what's the difference between the Hidden Talents program and the Fast Track? John, the Hidden Talents program, you spent 4 weeks with me on the floor or remotely learning how to trade. After the 4 weeks, you get $15,000 to trade and off you go. On the Fast Track, you have 2 weeks, but you get half the funding and the training. So the only difference is the costs as well. Fast Track is like a little shortcut, half the program done in 2 weeks, but the only thing is you have half the funding. So when you get 10% on 7,500, then you go into the full program, which is 15,000, and you build your journey from there. So that's the difference between the Fast Track and Hidden Talents. What kind of questions get on the phone interview? Sorry. From what I know, I don't do the interview process, but from what I've overheard, some of the main questions are, what's your strategy? How long have you been trading the financial markets? Do you have a track record, proof of trading? Have you ever hit a drawdown? Have you ever blown an account? And if you did, how do you build yourself back? And can you follow the rules of the program? And I think experience more or less. Those are the ones I know, but there's some other questions. So the best thing to do is probably ask one of the key members on the AudaCity app with the green badge, and they'll help answer your question. Okay, let's get another question. Okay. Okay, the slides you shared, you indicate 15 minutes time frame for entry. Why is this so? Is it not better to take entries on a 4-hour and daily time frame? Sam, the reason why I mentioned 15 minutes is because that's incorporating, you've analyzed the market from the higher time frames. So you know the trend of the market. So what you're looking for a reversal on a lower time frame to join the main trend. So basically, you're just buying into the market at a discounted price, because on the lower time frame, if, for example, on the higher time frame, the market is bullish, so that's the trend. But on the lower time frame, you can see the market is bearish. So you want to see when the market forms the lower low or the significant reversal point on the 15-minute or half an hour, then you buy the market at a discounted rate with a low risk to join the main trend. That's why I said 15 minutes, and I do that a lot. Hey, good day. Which will you advise? Risk management as a percentage per trade or pip per count, like 3% or 300 pips per day? Kwesi, 300 pips per day, that's very big, and that's like aggressive trading. So if you're risking 300 pips, then you must have a significant account size or, a bit of experience behind you. As a rule of thumb, I like to risk in terms of dollars now than percent. For example, if you got $15,000, your drawdown is 10%, which is $1,500. I'll be risking probably $100 a trade and always factoring in 2 to 1. Just hold on a second. I'll factor in 2 to 1. So that's something I would do or factor in. So that's why. But if you want to know more about that, Kwesi, you can contact me on the AudaCity app, training at audacitycapital.co.uk, or you can just send me a message on the AudaCity app, and I'll actually go in depth and answer your question with a live example. So if you want to do that, that's fine. Anyone else? Yep, that's fine. Got more questions? Okay, you're welcome. So pretty much that's it for the first set of questions cleared. Yep, so if anyone wants to know anything more, just go onto your AudaCity community app and just send me a private message and I'll answer all the questions in depth. But like I said, thank you very much for everyone for your time. I will put some more content up on the app. So this summarizes all my webinars for the last 5 months. This is 6, which is a summary of all the last 5. So I look forward to bringing more content later on in the year. But in terms of webinars, this will be the last one. I will bring the webinars back, but it will be sometime after September because I've got a big demand for people joining the HTP that I need to focus more time in helping them and mentoring them. But on the back end, I'll be sharing little short videos and content on the app. So this will be the last webinar. I think I've done quite well anyway, because I'm doing this by myself. I don't have Leah here with me no more because Leah's not here today. So that's why it's a bit, yeah, I'm kind of like multitasking between 2 or 3 screens, but yeah, but Leah's been a good help. But unfortunately, Leah's moved on, but Leah's still here supporting on the back end of things. So yeah, so we still appreciate her help and what she's done for the company and what she's done in terms of supporting the webinars as well, because before she left, before she moved on to another job, Leah did show me a few things and she's helped me as well. So I always show my appreciation to Leah for what she's done over the last 6 months. And as well, she's helped develop me as well. So I always have a great relationship, and Leah will be back in the future at some point, maybe making guest appearances and helping out here and there, but she's mainly focused now on starting her own venture now, her own journey. And we support Leah in whatever she does, and we still have a great relationship. So do look forward to seeing me and Leah working together in the near future on something else. But for now, the webinars will come to an end and there'll be something else. But whatever I bring forward in the next few months, it will always be of value and always be of greater value than the previous concept, because it's not about giving lack of quality. It's always giving great quality and value. So although I'm stopping the webinars, there'll be something greater than the webinar. I always look to improve on what I do. So this gives me a time to reflect and look at all the mistakes and observe a few traders and bring more content, because as traders, and the whole point of these webinars is for you guys to learn from other people's mistakes, to develop yourself, and it's just free value. I don't come on the webinars telling you to sign up or sell or hard sell. I'm a trader. I know what it's like. I just share my passion, share value, and hopefully you guys can take from my value and make money on the markets. Thank you, Sam, for the kind words. So, and everybody who's followed me over the last two and a half years since I've been with AudaCity Capital, I've worked with Leah for about 1.5 years, and you can definitely clear me and Leah have got very good chemistry and we've done very well. But in life, people do move on to greater things. I cannot hold Leah back from a great opportunity, and AudaCity Capital cannot hold Leah back from a big opportunity as well, because Leah is very talented and very gifted. So like I said, we wish Leah all the best. We still have a healthy relationship, and Leah will be back sometime in the future again to work with us. But for now, Leah's more focused on her career path, and we wish her all the best. And we support Leah in whatever she does. So there's no hard feelings. Leah did not quit. She didn't get fired or anything like that. Leah just moved on to start her own venture. And as I've said, you can see from what Leah does on the back end of things, Leah is very talented and gifted. So it's only a matter of time before Leah will branch out and level up. But like I said, I appreciate Leah for what she's done. Leah's even on this webinar, watching on the back end of things. And she can see that, well, it's a major improvement and I've done well. I've made her proud. So thank you for that, Leah, as well. And I thank you guys as well for all you've done. So I look forward to talking to you guys again very soon. And also, I will be having live one-on-one trader talk sessions as well. Like Charles yourself, I definitely will be reaching out to you. There's so many Charles, but I think I've got your details, but I'm not too sure, but I definitely need to reach out to you. So if you can kindly please send me a direct message on the app with your email, I will contact you and have that conversation with you. If not, I'll just get my assistant to get your details to me and I will contact you. I have quite a few traders I'm going to have personal conversations with because during the whole process of the last 6 months, I have been monitoring the progress of certain traders and your patterns and your consistency. And once I see certain features, I will be talking out to you. I did say I do want to talk to you traders, and I want to work with you traders on something unique. So I'll be reaching out to you guys independently and privately and having that discussion with you. So thank you very much, everybody, for coming on to this webinar tonight. I know the Euros are on. I'm watching football, but I can multitask. I'm just not shouting. I'm watching the game and, I'm doing that, but I'm just watching the highlights because the game starts in about 8 o'clock. But at the end of the day, I still make sure I deliver value. And as everyone who knows me personally and everyone who's worked with me, I'm passionate about what I do. I take pride in my work and I only give 110%. If I feel I can't deliver a webinar value in 110%, I will not do it. A lot of people copy my work over the last few months. I've seen some competitors take my work and copy it and start their own. That's fine. But remember, it's not about what people are copying and replicating. I share my experience. That's one thing no one can replicate, my experience and what I've seen. You can copy my content, but you can't deliver it the same way. So what makes me different is I'm just straightforward. I share my experience and I don't ask anybody for money. If you want to come on board, that's your personal choice. There are protocols and there's a team in place. I just share value, and I believe from the value I share, you should be able to make money straight away. So thank you everyone for your time and patience this night, and have a great evening. The people who've hit me up on the email, I'll make sure I get the free content to you as well as a copy of the webinar. The webinar, because of the people who joined late, I'll just post the link on the app for you to download. And everyone else that's contacted me, I'll definitely get back to you. And at a later date, sometime next week, this video will be posted on YouTube. So thank you very much, everyone, for your time. I'm going to end the webinar and have a good evening. Take care. John Ozzie's out. Thank you for your time.